Hello, all. In my market outlook 10 days back, post Corona, we have discussed about the condition in India as well as the global, and we have shared you data of what's going to happen across the globe and what's exactly happening. And we said that we need to wait for 10-15 days to discuss about our next course of action. And we have given three situations. Number one, the Corona epidemic goes pandemic stage out of control. Second one, we remain status quo. And third one, we improved. So definitely we have not improved, but we have not either gone to the pandemic stage. Most of the countries have identified what's the problem area. They are taking strict measures accordingly. And I hope that we are nearly bottoms up as far as the market goes. Okay, and we are in a recovery phase right now. It has been seen in the Dow Jones as well as the different index across the world. Dow Jones, in fact, has moved to the 18,000 level 20 days back, and it has moved to currently it is trading as 23,000 level. So it has moved across 25 to 30% in just only 15-20 trading days. In Indian stock market also, we have seen Sensex going to the as low as 7,000 level, and it is trading as 31,000 level. So we have nearly picked up 15% from the bottoms. What happened is that IMF today has said that India's growth will be the highest among the G20 nations going ahead. RBI today has taken a very drastic step by reducing reverse repo rate by 25 basis point to 3.75%. That reverse repo rate is a rate at which the banks park their funds with the central bank. So reducing the rate will allow bank to lend more to the productive sector of the economy. Okay, so that will encourage bank to lend more. Apart from that, RBI today has given an additional 50,000 crore towards targeted long-term repo operations. Now, this is important to ensure liquidity in the systems. Okay. Apart from that, another 50,000 crore today has been announced with the RBI for refinancing windows for financial institutions like NABARD, Housing Bank, and SID. Governor Shashikanta Das has also said that inflation is in a declining trend and could fall below the 4% marks that we have. Even the retail inflation for the March has fallen record low of 5.91% on cheaper food products. Okay, the wholesale index will perhaps go below 4%. And when I talk about the lowering of the inflation rate, interest rate will further go down from here. That's the quite obvious system which is talking about. IMF has also projected a V-shaped recovery for 2021, close to 9% points from the global GDP. If you see the data, he's saying that the world GDP in 2019 has grown 2.9%. In 2020, this year will have -3%, and next year it will be 5.8%. And if you see the India's number, it's the only positive number across the globe, apart from China, and we will have a very strong growth as per the IMF projections. Today's data, 7.4%. China will be huge growth, 9.2%, because of the steps that they have taken. I'm not talking about good or bad, whatever things. It's not a platform to talk about. Overall, the India's projection is looking extremely positive right now. I have with me Naren, who will be giving a very small things about why market looks so attractive right now, and why people should invest right now. Okay, investment currently should not go into a lump sum into the equity. It should go in a staggered way. Probably invest in a liquid fund and do a daily systematic transfer to the equity. Or there are a couple of stocks which are available at a rock bottom, very cheap prices. I will be sharing data with all our registered client on couple of stock investment options also, and for mutual funds, I will be strongly recommending continue the SIP, and for lump sum investment, do invest right now in a liquid fund and floating net fund. Debt instruments, fixed instruments looks very attractive right now. And if you invest in a liquid fund or debt instruments coupled with a daily systematic SIP into the equity for the next 3 to 4 months, I think you will get a phenomenal return going ahead. Over to you, Naren. Just hear out what he's saying.
Welcome to all of you. See that this actually was a phenomenal special situation of the entire market, because such special situations happens only once in a decade, and that opportunity should not be missed for investing, and also such special situation should not be used for redemption, was our key takeaway at that point of time. Why did FIS redeem? Basically, there is something called home country bias. What happens is that if you are sitting in America and you have got money all over the world, what you normally do is you keep the money that which you have invested all over the world, you take it out and keep it with you in your bank account. That is what they all did in March, which is why in the month of March they took out 77,000 crores from India. And that kind of a number I've never seen in my life. And that was the kind of investment opportunity which happened from an India perspective. Due to that, Indian markets became dirt cheap, and in my entire framework that we had created in ICICI Mutual Fund of valuation had become extremely attractive for the market through all the models that we use. For example, if you made use of market cap to GDP, the market cap to GDP model had touched 50%, which had become very, very interesting. If you looked at price to book, it had also become very, very low. The yield cap had reached a record which had been touched only in the global financial crisis. And so if the trading price to earnings of the market had also reached a very, very low level. So I would say that in the month of March, particularly around 23rd, 24th, when the market was 7,600, we had reached a record low valuation, and that kind of a valuation is unbelievably low at this point of time. And frankly, it is not that FII sold India because there was a problem in India or something like that. It is just that they sold in panic, and therefore the person who bought that day was a person who bought on panic. And as all investment theories say, if anyone buys in panic and when valuation is very, very cheap, there is a massive opportunity. See, India has a lot of benefits because of, a cautious approach. I don't know how many of you know, India Reserve Bank has $480 billion we had in March. So what happened was every time rupee depreciated by 1 rupee, the Reserve Bank made a profit of 48,000 crores on every rupee move. And as most of you know, oil came down from $65 to $25. And for every dollar move in oil, India saves something like about 11,000 crores. So on a $40 move in oil, India saves 4,40,000 crores of rupees per year. So basically what happened in March was a massive macroeconomic benefit which accrued to Reserve Bank of India, and it accrued to dollar rupee because India's entire dollar, which is kept for handling current account deficit, just disappeared because the current account deficit itself completely disappeared and became a current account surplus. And that is the biggest benefit that you see at this point of time, that Indian macro, while it looks very, very bad, actually there is a superb amount of money which is sitting with Reserve Bank of India, which is like, a massive amount of cushion which is available from a country perspective. The other point of thing which actually I want to explain, which is not very easy for people to understand. Every day you will read about how fiscal deficit is in trouble. Actually, and periodically people will tell you that India's fiscal deficit is going out of control. That kind of statement will be made by a lot of people at this point of time. What I have learned from economics is that there are three types of people. One is people like you and me, second is companies, and third is government. And what I learned is that all three of us can't save together. It means if all of us start saving and all the companies start saving and all the government start saving, we will have complete depression. Just example, suppose I go and save 10 rupees of money in a bank. Let us assume ICICI Mutual Fund also saves 10 rupees in a bank. There has to be someone who has to spend 20 rupees. That 20 rupees has to be spent by the government of India. So what happens is, whenever people and companies are saving, government has to spend. So if I and all of you and ICICI mutual fund and all the companies of India are saving, government has to spend. There is no choice here because this is like double entry bookkeeping. Your triple entry has to be zero. That means if people are saving, companies are saving, government has to spend. Today, can you and I spend? The answer is no. We are not even allowed to go out of our house. So we can't go to a mall, we can't go to a multiplex, we can't go in May on a holiday, no one can go out at all. So all of us are saving. Can companies spend? The answer is no. All we can do is organize conference calls. And so government has to spend. So if you read reports in the newspaper that India's fiscal deficit is going up, it has to go up. Till the day you and I can spend lot of money and not save, India's fiscal deficit has to go up because someone has to spend and only the government can spend. Please don't worry about this word called fiscal deficit till situation becomes normal and our oil goes back to $60. Please do not worry about fiscal deficit. Just forget about the word called fiscal deficit at this point of time. Even if government gives money free to a lot of people, don't worry about it at this point of time. There is another benefit which is there from an India perspective which people don't realize. India has huge stocks of food sitting in Food Corporation of India. We have not been able to reduce the stock. So even if that stock is given to lots of poor people in India, that would also be a positive. So frankly, from every point of view, there is no problem. Consequently, the entire situation at this point of time is actually a buying opportunity at this point of time. So where do you buy? That is the question, in which sectors you buy. We have a view, over a period of time that you have to buy areas where things are cheap and we are using them in a big way. Take, in my investing career and what we have seen in ICICI Mutual Fund in the global financial crisis, what we saw in the taper tantrum, what we saw when the European problem happened, in all these cases, what we saw in ICICI Prudential was during all big global problems, you have to invest in equity. And that is the reason why during this period, there is a clear case at this point of time to put money in equity. Coming to debt. Debt is a sitter asset class at this point of time. Why is it a sitter asset class at this point of time? There is only one thing that a government can do anywhere in the world, cut interest rates. So what can you do? You can invest in debt funds. So what happens is, if you know, in the last 7 years, the real estate prices have gone nowhere. Now, in the last 5 years, equity prices have gone nowhere. So in these periods when you have deflation, there is only one thing that central bank and the government can do, which is bring down interest rates. So what can you do in that period? Invest in debt funds because they are the best way to actually capitalize on a reduced interest rate environment. So when you bring down interest rates, what kind of products do well? All debt mutual fund products do well. What is very important to realize that we are in a deflationary environment. How the government can solve the problem is bring down interest rates so that finally at a much lower interest rate, people are willing to take some risk and do something. So that is what has to happen. And in my opinion, you'll be surprised to know the quantum of money that is being lent back to Reserve Bank yesterday or day before yesterday by all the banks in this country at 4% overnight was 6 lakh crores. I'm not talking about classified information. This is public information from the Reserve Bank website. 6 lakh crores is being given back to Reserve Bank at 4%. So there is absolutely no shortage of money in the market. So I believe that 6 lakh crores one day will get deployed and bring down all the interest rates significantly. And when that happens, all the debt funds will deliver very, very decent returns.
Thanks, Naren. You heard what Naren said over the call. To summarize, what he says that RBI is sitting at a huge amount of cash right now. We have also have a favorable fiscal condition because the oil price has come down deeply. Again, the market outlook look extremely positive. One thing had to be taken care of is that market already factored in the future projections. So we already factored in 40% cut due to coronavirus impact. So from the 42,000 Sensex level, we have moved on to 27,000. We have not around 31,000 right now. So we've already factored in. So market factored in way ahead than what is going to happen in the future. So what I can see that across the globe, it has been predominantly seen that the market, I think, is a bottomed up, and it's a very important point that you should get enter into the market in a staggered way. You should park your money in our debt funds. Debt funds again looks very attractive because government is going to cut interest rates from now on. Whenever interest rate cuts, debt funds performs well because it goes inversely proportionate to the interest rate. Whenever interest rate comes down, the prices of debt funds goes up. So you will see a huge return in debt funds to the tune of 7-8% from now on. So my suggestion will be park money in a liquid fund or floating interest fund, and do a systematic transfer into equity fund from here on. And from the stock options, there are a couple of stocks which looks extremely attractive. I will be sending you a couple of mails regarding that who are registered with us. Do invest in a stock which are predominantly good companies, are quite resilient as I said earlier. So overall, I will say that. So take participate in this market conditions and make use of the special situation that we have right now. In 2 to 3 years time, we can make a huge amount of asset if we go with a systematic approach and invest right now. Thank you all. Do subscribe to my channel. Be safe. Thanks.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.